Everyone, this is Giuseppe Basilio, also known as the FibStalker. Thanks for joining in this daily intraday review. Today is February the 6th, 2018, and this is part of the FibStalker analysis and trading service. As usual, if you have not read and accepted the usual disclaimer, please pause the video now and read and accept the usual disclaimer. So let's dive into the markets, and we're going to start from the SP 500. This market has continued yesterday and then started a reaction higher during the night here. I have two levels I want to show you. One is the 2703, which is the 50% from highs to lows here, if there is a continuation lower in this market. SP 500 likes to trade in traditional measure move. On the other hand, on the very large time frame here, we have an extension that has traded, and that could actually push price to previous highs or even new highs. There's an extension, highs to high, got into the first target, and then the next measure move, same anchor, new high, has actually traded, and so that allows us to use the high to new high, and that's what has traded and has targets above. So this could be the end of this correction. The market could also trade a 50%, 2704, or could also print previous highs or higher highs as well. Okay, next is the dollar index. The dollar index is within that 90 area of support, and we have seen a sequence of measure move higher on the smaller time frame. So you can see also the 89.32 has pierced. So the next level we have is the inner extension short here. The level that has pierced was the aggressive lows to lows here. So this market now has the potential to continue higher until at least into 90.17, and I'm going to include also the all the way halfway back. It doesn't mean that the market will get there, but if it gets there, there'll be additional resistance. Also in the 90.40 area here, we can see a correction. Sorry, we can see additional resistance here. So that could possibly be the end of this move. Now you remember that we identified in the last 2 days, on Friday we identified this 50% retrace here that has hit the first target, and when we trace the next measure move from lows to highs, we could make the case that this 89.23 has traded here and brought price into that first target. So this market is currently correcting into the next measure move. That's the lows to highs, and that's the 4-hour retrace in the 89.58. Gold continues its correction lower here. When you look at the weekly, the market has printed previous highs and started that correction. So we're going to use in this range the 50% might not hold. We are going to use the highs to highs. 1317 could come into play here, and when we look at the daily time frame, the highs to lows has traded, and 1322, the low 1323 has traded, and the market went to retrace the all the way halfway back here. Okay, so there is a short in play, and that's the 1345 that has been in play since the Asian session yesterday. It has a target at 1313 that lines up with that 1317 long area. All right, so that's what we see here on this market. Next is silver. Silver is also moving lower here, and differently from, and it's now into that halfway back that is under pressure, 1672. That was holding yesterday, pushed price higher, and now it's under pressure again. When we look at what is causing this, it's up 50% from highs to lows here, and that's where price has reacted. We can see that on the 4-hour time frame as well. So as I mentioned, this is a lateral move with a downward bias, and I do not anticipate 1643 to hold here. So we could see this market get into 1634 and 1603. Let's start with the majors. The majors, we are seeing the Australian dollar, US dollar, that has reached but not pierced that 78.37 here. 78.37. The low is 78. Sorry, it was pierced. So I'm going to remove this level now, and the level was pierced. So what we're going to look at now is the potential reaction here and the levels that could come into play. I have two levels here. The first one is an extension short due to the fact that this market was extended on the downside, 79.55, and if it occurs, this market could also retrace the full 50% here. Okay, so the two levels in play here on the daily now are short, 79.55, 79.85 here, and these are the level in place. So we could see a reaction, a deeper reaction in this market, and the same anchor new low in the 4-hour time frame could also come into play here, and that's a 79.29, still short of those important levels of resistance. So if price gets into this level, 79.55 or 85, then that would be a new short opportunity. Note also that the 78.17, which is the all the way halfway back from lows to highs, has not come into play yet. Okay, so that's a level that we will add and we will watch going forward. The euro dollar is currently trading an extension long. This is an aggressive trace from 120.90 to highs, and as you can see here, this market has had traction is having traction from this level, so this is pushing this price higher. And the other trace, there was an inner trace of 50%, also is contributing to push this price higher, but the participation really comes from the extension short here. Now what we saw on the 4-hour earlier during the European Open here is the highs to lows here as traded, as you can see here, and broke price into that first target. The next measured move is under pressure here, and there is a reason for that, because the larger extension has traded. The market is right at that level, so if we get a reaction from here, we could see this market reversing into and retesting the 123.14. If that's not the case, then we're gonna see possibly even a retest of previous size, if not higher highs as well. Now that needs to be matched with what's going on the dollar index. As we showed before, there is a possibility for the dollar index to continue higher, so this could be a temporary reaction here, and then this market could continue lower. So there are different scenarios open at the moment. 123.74 is the next short on the 4-hour time frame, and the 123.14 is in play. Here the two targets above for the euro dollar are the 126.41 and the 128.11. Next is the pound versus US dollar. The pound versus dollar has pierced that 140 support level here, and that support it's a high to new high here that we can see on the weekly time frame, and so that level is now gone, and there is another extension that we can take into consideration. It's inner extension here, and that has pierced as well. So at the moment, what we can consider here is that this market is retracing here, and I'm going to consider the extension short lows to lows, and that extension has not yet come into play here, 139.58. This market could also retrace the full 50% from highs to lows here, so that's something that we need to consider. The 140.89. Okay, so on the 4 hour time frame here, this is a reaction, so we don't have set up on the upside. So the two levels that we have to consider are the short levels 139.98 and 140.89. The US dollar Canadian dollar continues higher here, and it has completely pierced that 124.17, and it's now ready to test that all the way halfway back here, the 125.82, which was it on the daily time frame, and that has not been tested yet. 125.84, and if that happened, we could get a reaction lower here, and I'm gonna use the extension from lows to highs if that happens. So we will see whether that level holds or not. So we are looking here at also at a potential reversal scenario for the US dollar Canadian dollar here. So the Canadian dollar weakening against the US dollar that is strengthening recently on talks of increase of interest rates. So we need to start considering that scenario as well, and price above 126.61 would actually support that scenario as well. The extension that I mentioned here, and I'm going to update that extension from lows, from highs to highs. As you can see here, with updated highs as traded, and is supporting price, which would suggest a continuation higher here into first and second targets above, and we can see that on the daily as well, because that high corresponds to the high here in this bar, and so we can see the targets above 125.96 and 126.46 eating into that area of resistance. Next is the US dollar Swiss franc. This market is trading resistance here, 93.94. That's one of the resistance level, the short resistance level that we identified here. As you can see, this market has traded that level. However, in order to understand what's going on, we really need to go on the 4 hour time frame here. There was a 50% that played and progressed into that first target. The next measure group failed, and the market also failed a full 50% retrace here, but initially, but then it held that level. So we need to consider that level traded here. We're seeing resistance 93.92, and if this market makes into the high, if it retests the 93.92, could put the level under pressure. Otherwise, we're going to consider the 50% long here on the 4-hour time frame, and that's the 93.23, as we could see a reaction, temporary reaction lower in the dollar index and US dollar Singapore dollar here. So that's what I'm seeing at the moment in this market. So 93.23, or just a continuation higher above 94.26. Next is the US dollar Japanese yen, and this market has seen a huge move lower on that weakness on the SP 500 that we saw yesterday, and it went to retest the 108 to 82. So that level, 108.80 area, is still in play here, and as you can see, we are seeing that bounce. Whether this is going to continue higher at this point, it depends on multiple factors, not only the dollar index but also the carry trade in the SP 500. So we need a little bit more caution here, but this market is actually still responding to that 108.23. So we don't have any other levels for now on the 4-hour. That's just a range, and so we'll keep it at the levels that we already have, with price still weekly in the weekly range 108.80, 113.40. Okay, next is the New Zealand dollar, US dollar, and the Kiwi here has actually, when we look at different levels and trays that we have, we identified a level here that has not been tested yet, and there is the 071.90, 072 looming lower. This market, however, is at the moment, as you can see here, reacting higher, and as mentioned, we might see a temporary dollar index weakness here, and this market has been the lower lows here, but is reacting, and so we're going to consider the 50% short here, as well as the full 50% from the highs to lows. So these two levels are very, very close, 73.37 and 73.45. So it's really a range, and that's where this market could stop if we get a continuation higher in the dollar index. So what we are seeing for the rest here is same as same. So the levels are going to be the long levels are going to be the same, and they have not been tested yet. 71.05 and 71.78 and 90 here. All right. US dollar Singapore dollar here has seen a move higher, and the 50% long here that we mentioned a few days back from the beginning of February here 2018, 130.78 has actually reached the second target now, and the level I'm looking for on the 4-hour time frame is the highs to new highs. This has been we can consider that traded already, so this could come under pressure here, and this level could be break. If that happens, then the next area we need to consider here is the lows to highs, and that would be 31.22. Okay, so this level could come into pressure here. If it trades again and the market moves higher, you're gonna see a continuation higher, and all the majors will likely move accordingly, with the exception of the US dollar. Canadian dollar is actually continuing, potentially continuing higher. Okay, so 131.22 is the other level to watch, the other level long to watch in this market. All right, and this is it for now, and I'll see you later. Bye bye now.